Hello everyone and welcome to our weekly global market outlook. I'm Tolga. We have just witnessed the steepest US market drop since early 2020 as inflation came in hotter than hoped, trade tensions heated up, and central banks grappled with new economic projections. Coming up this week, we have got fresh inflation data, central bank minutes, and more tariff-related headlines. Let's dive into the last week's recap. Equities plunge. US stocks took a sharp turn downward, logging their worst weekly performance in 5 years. The S&P 500 slid more than 9% over the week, now 17% off its record high from just 6 weeks ago, while the NASDAQ lost around 10% and the Dow fell 8%. This wave of selling hit small caps especially hard, pushing the Russell 2000 into a full-blown bear market after a 20% drop from its November peak. Across the Atlantic, the Stoxx Europe 600 slid 8.4% and Japan's Nikkei tumbled 9% as newly announced tariffs rattled global investor confidence. Trade tensions escalate. The US unveiled wider and steeper tariffs, reportedly reaching 25% to 35% for key imports, which led major trading partners like China and Japan to introduce retaliatory tariffs on American goods. China went a step further by restricting exports of rare earths. Meanwhile, Europe's automotive sector was spooked by mention of possible new levies on imported cars. The developments drove up inflationary concerns and overshadowed robust US labor market data. Stronger US jobs and persistent inflation. Despite the turmoil, US non-farm payrolls exceeded expectations for March, posting a solid 228,000 new jobs. Average monthly job gains still moderate relative to last year, but underscore that the labor market is not yet wilting under tariff pressures. However, core PCE inflation ticked up to 2.8%, pushing further above the Fed's 2% target. Fed Chair Jerome Powell warned tariffs could persistently boost prices and sap growth, a view that gained traction across the market. Flight to safety. Treasury bond prices rallied sharply, sending yields tumbling. The 10-year yield briefly fell below 4%, its lowest in half a year, as equity volatility propelled investors toward safer assets. The US dollar also weakened, finishing down about 1% for the week, amid concerns about long-run trade implications. Oil plunged, with WTI crude slipping more than 10% to around $62 a barrel, its steepest weekly slide in over a year. Let's look at the week ahead. Monday, the Federal Reserve's Consumer Credit Report will offer insight into how households are coping with inflation and rate uncertainty. Also, EU trade ministers will meet to discuss a response to the US tariffs. Tuesday, no major releases in the US, but watch for more tariff-related announcements. Globally, Germany posts industrial production figures that may reflect the early effects of new trade strains. Wednesday, FOMC minutes will be the main event, illuminating policymakers' views from the March meeting. The Fed held rates steady, but signaled rising inflation worries and lowered 2025 growth forecasts. We will also see an update on the US wholesale inventories, key for supply chain and consumption clues. Bear in mind that Trump's reciprocal tariffs will take effect today. Thursday, the spotlight is on March CPI, expected to show continued upward price pressures. Weekly jobless claims remain an essential barometer of labor market health, and the monthly federal budget statement will gauge spending patterns and potential deficits influenced by trade policies. In the global front, Chinese CPI is expected to show a second month of deflation. Friday, we will round out the week with the PPI, further detail on inflation at the producer level, and preliminary consumer sentiment from the University of Michigan. Rising prices and ongoing market volatility may weigh heavily on sentiment trends. Also, big financial institutions in the US will report earnings. In short, markets are grappling with steeper tariffs, elevated inflation, and a hawkish tilt in central bank messaging. The coming week's CPI and PPI data, along with the Fed minutes and corporate earnings, could shape whether the bearish mood deepens or if we see signs of calm. Keep an eye on further tariff clarifications as any shifts there can jolt equity and commodity markets alike. Thanks for tuning in. If you found this overview useful, please give the video a like and share it with your network. Don't forget to subscribe so you won't miss next week's update. Let us know your thoughts in the comments. How do you see markets responding to these tariffs? I'm Tolga, and I will see you next time on our weekly global market outlook.